future millionaires and smart money movers. Ever stared at your phone, knowing you should invest, but then freeze? You hear names like Acorns, Robinhood, Vanguard, and your brain just goes, Error 404, investing path not found. The hardest part of investing isn't picking stocks, it's picking where to even begin. So if you're asking, which investing app is right for me? And more importantly, where do I click? You're in the absolute right place. Today, we're cutting through the noise. We're going to break down Acorns, Robinhood, and Vanguard, demystify their jargon, and I'm going to show you exactly how to get started, step by step. Let's make that first investment happen, shall we? All right, let's be real. Why is picking your first investing app such a mental block? Is it the fear of losing money, the overwhelming amount of options? Or maybe it's just that nobody has actually sat down and shown you the ropes in a friend explaining it to you kind of way. Many platforms promise to make investing easy, but they cater to different types of investors. Understanding your goals is crucial. Are you looking to dip your toes in with spare change? Are you eager to pick individual stocks? Or are you a long-term, set it and forget it kind of person? Before we even open an app, let's briefly categorize ourselves. If you're someone who wants automatic, hands-off investing with small amounts, you're a micro-investor. If you love the idea of buying specific companies, exploring ETFs, and having more control, you're a DIY trader. And if you're all about building serious long-term wealth through diversified low-cost funds, you're a long-term strategist. Keep these types in mind because they'll guide our choices. Ready to meet our contenders? First up, we have Acorns. Think of Acorns as your friendly neighborhood piggy bank that automatically invests your spare change. It's built for the micro-investor, someone who wants to start small, invest consistently without thinking, and let the magic of compounding work its slow, steady wonders. So, how does it work? Acorns links to your debit or credit card and rounds up your purchases to the nearest dollar. That spare change, say 50 cents from a $4.50 coffee, gets collected. Once these roundups hit $5, they're automatically invested into a diversified portfolio of ETFs based on your risk tolerance. Where do I click, you ask? You download the app, link your bank, choose your portfolio, conservative to aggressive, they'll guide you, and turn on roundups. You can also set up recurring daily, weekly, or monthly investments. Pros: super easy to start, automate saving, diversified portfolios, and it has an earn found money feature for cashback. Cons: it's a subscription service, 3-9-month, which can eat into small balances, and you have less control over individual investments. Best for complete beginners, those who struggle to save, or anyone who wants investing on autopilot. It's truly a hands-off approach for building foundational wealth. Next, we jump into Robinhood, the platform that really popularized commission-free trading. If you're a DIY trader, someone who wants to actively buy and sell individual stocks, ETFs, or even crypto, Robinhood might be calling your name. It boasts a sleek, user-friendly interface that makes buying assets feel almost like shopping online. Where do I click? Download the app, link your bank, and once your funds clear, you can search for a company, e.g. Apple, tap Buy, enter the amount or number of shares, and hit Place Order. It's that straightforward. Robinhood offers fractional shares, meaning you can invest as little as $1 into expensive stocks like Amazon or Google. They also provide instant access to funds after deposits for some users and offer a cash management account. Pros: commission-free trading, stocks, ETFs, options, crypto, incredibly intuitive interface, fractional shares, and extended trading hours. Cons: the simplicity can sometimes encourage overtrading, and while they've improved, some users have raised concerns about customer service and past platform outages. It's fantastic for those who want direct control over their investments and enjoy a more active role. Just remember, with great power comes great responsibility. Do your research. Finally, we arrive at Vanguard, the heavyweight champion for long-term strategists. If your goal is to build serious, diversified wealth for retirement or other major life goals with a focus on low-cost index funds and ETFs, Vanguard is often the go-to. It might not have the flashy interface of Robinhood or the micro-investing novelty of Acorns, but it's renowned for its investor-owned structure, which means lower fees for you. Where do I click? This one's a bit different. You'll typically set up a brokerage account on their website, though they do have an app. Once funded, you'd navigate to buy and sell, search for a Vanguard ETF, like VOO for S&P 500 exposure, or VTSAX for total stock market, enter your amount, and execute. Their strength lies in their vast array of low-cost index funds and ETFs, which automatically diversify your money across hundreds or thousands of companies. Pros: extremely low expense ratios, wide selection of funds, strong long-term performance, and a company philosophy that prioritizes investors. Cons: the interface can feel a bit dated for some. Minimum investment requirements for mutual funds can be high, $3,000 plus, and it's less suitable for active trading. Vanguard is for those who understand the power of passive investing and want to build a solid financial foundation for decades to come. It's a marathon, not a sprint. Okay, so we've met the big three: Acorns, Robinhood, Vanguard. Now, how do you decide? Let's throw them on a comparison table. Acorns, best for absolute beginners, hands-off investing, micro-saving. Focus, automated spare change investments. Fees, monthly subscription. Control, minimal. Robinhood, best for active traders, individual stock, ETF, crypto investing, those wanting more control. Focus, commission-free trading. Fees, none for trades, premium services available. Control, high. Vanguard, best for long-term investors. Passive investing, low-cost index funds to ETFs. Focus, diversified wealth building. Fees, extremely low expense ratios on funds. Control, moderate. You choose funds, but they are passively managed. So ask yourself, what's my primary goal right now? If you literally just want to start saving anything and have it invested without thinking, Acorns is your friend. If you're itching to pick specific stocks, learn the market, and get hands-on, Robinhood could be perfect. But if you're serious about building a robust, low-cost, long-term portfolio and understand the power of index funds, Vanguard is your champion. Remember, you don't have to pick just one forever, and you can even use them for different purposes. The most important thing is just to start. Which one feels right for your first click? And there you have it, folks, your practical "where do I click?" guide to Acorns, Robinhood, and Vanguard. I hope this breaks down the barriers and makes that first step into investing feel much less daunting. The biggest mistake you can make isn't picking the wrong app. It's waiting too long to start. Every dollar you invest today has more time to grow. So take what you've learned, choose the platform that aligns best with your current goals, and make that first investment. I'm genuinely excited for your financial journey. If this guide helped you, please smash that like button, subscribe for more financial wisdom, and let me know in the comments, which app are you leaning towards, or which one did you start with? Your experience helps others. Keep learning, keep growing, and keep investing smart. See you in the next one.